Thank you very much for attending this. I'm absolutely delighted. It's such a huge panel, but I think we have probably one of the most diverse panels, not only in terms of nationalities, you will see when they introduce themselves, but also in terms of age and probably definitely gender. So I think this kind of conversation is going to be really exciting just because we do have such a diverse group of people here. So let me just kick off by asking everyone to introduce themselves. Perhaps maybe ladies first. We'll start with the left with Deepshika. Just tell us a little bit about yourself and what you do.
Hello, everyone. My name is Deepshika, and I heads up the business development and partnership for a company called Quantifeed. We provide robo-advisory white label solutions to the banking and the financial institutions, comprises of TPS, StanChart, and working with some of the insurance firms as well. Thank you. Rob?
Hi everyone, I'm Rabia Anwar. I'm a lawyer both in the UK and the US, but we work with clients all over the world, including the UAE and a lot of stuff in Asia as well. We focus primarily on financial services, fintechs, digital assets, and we help our clients with every possible issue from a legal, regulatory, or strategy perspective.
Hello, I'm June Kuvinich-Kool. I'm a founding partner of Utrip Thailand. It's a multi-currency wallet. Prior to Utrip, I was also founding partner of Grab Thailand.
Hi everyone, I'm Ahmed Salimi. I'm CEO for Digit Plus, an agri-based fintech in Pakistan. We provide payments and lending solutions to farmers largely.
Hello everyone, my name is Roy. I'm the CEO and co-founder of Emerge Group. We are the commercialization partners for IP right partners, content creators, and brands.
And finally, I'm Lynn. I'm an ex-commercial banker turned to be an entrepreneur for a fintech called MulaX, which focuses on the underserved and underbanked market here in Thailand and hopefully over Southeast Asia. So let's kick off. Our first question actually is about digital banking. I'm going to ask a non-banker because we've got 3 ex-bankers here. So I'm going to ask a non-banker, which is June, who successfully has founded Grab, which is huge, and now Utrip, which is also fantastic. So how would you define what a digital bank is? How would you define it? Are they all the same? Are they different? How would you think about this definition?
Okay, thank you, first of all. Let's say digital banking to me is such a huge word, right? But to really understand the competitive landscape, you can probably break it down to like a few types. Although like the challenges would apply to the whole industry, but when you look at each of them as in like how they came from the starting point, then you can start to see the little bit of differentiation and then the specific challenges that they face. First of all, like for example, the one type is a straight bank, the incumbent banks or the traditional banks, right? So given the behavioral changes out there, it's very normal for these banks to digitize. So develop their digital banking only channels. And these are banks with the banking charters, so they take deposits. And then their cost of capital is generally lower. And of course, the usual business model is to lend out the money and get the interest there. Now, these guys are quite diversified in general and are also protected. So they have a leeway in certain ways. And now, to the second type would be the neobanks, right, or the fintechs of the world. Take us for example. So fintechs would leverage other banks' charters, and then given that without a banking license, they tend to be in a more niche market. And because they're in a niche market, the landing model is usually very crucial to the survival, especially in the past few years where the financial market was in a turmoil, right? And the regulators, if they change something, and then because they're not diversified enough, the landing model could backfire. Now, it comes to the third type. The third type would be the challenger bank. So these are virtual banks with the charters themselves, and they challenge the status quo of the traditional banks. So they may not have as much legacy systems, the so-called legacy system, but then, yeah, in the past few years, you've seen that, we can talk more about it later, but because they take deposits as well, when you take deposits and you have to compete for those deposits, yeah, it becomes price war. So I would say in general there are three types.
Three types. So traditional banks, big legacy systems, neobanks, which I guess all of us are operating in that space. If not, we won't be on this platform. And challenger banks, which perhaps will come up in the future because licenses, it's also based on license, isn't it? Okay, fantastic. So let's move to an ex-banker, Deepshika. You're an ex-banker now in fintech, robo-advisory. What do you see as the key trends, perhaps, that will affect the type of digital banks going forward and maybe even innovations in that key trend?
Yeah, so you might have seen in the banking world, in traditional banking, let's say, and we have been talking about digitalization for quite a long time. And there has been development in the digitalization in the traditional banking. So let's say if you have to open an account 10 years ago, you have to visit the bank, get a bunch of papers, and wait for 15, 20 days to just open a bank account. But nowadays, you can done it in 2 days, 3 days. But is it enough to just have a mobile banking application to onboard an account and have a savings account? I don't think so. There are many services which everyone needs, especially the mass affluent, the ability to have a mobile application, ability to make payments, cross transfers, cross-border payments, and also the investments. Because the private banking and other clients have been served through relationship managers, investment consultants. But how about the mass affluents and the retail people? And given the digital banks and the neobanks are coming up, they are not just only providing a savings account or a mode to save the money in a digital form, but they are also providing payments, loans, and investments as well. So they are providing a lot of services through a mobile banking applications. And we all know in Southeast Asia that a person may not have a bank account, but the person will have a mobile phone. So if they have the mobile phone, they should have the ability to do all those banking applications or banking functions into a mobile app and be a part of a financial inclusion. And this not only help them to be a part of the ecosystem, but I think in world it will help to reduce the financial inequality, giving them access to the deposits, investments, and make payments in the less charges and the fees which is being charged by the banks. So the banks really need to top up their game to compete with the digital banking and in all aspects, not just onboarding, but to have investments, loans, credit cards, and whatnot.
But most banks have that today, I guess. So what you're then saying is that banking on your palm of your hands is a trend of the future and that everyone should be moving towards that way.
Exactly. I mean, the bank do offer as well, but if you think about, there's just credit card, debit cards, and the amount they charge. So if you have a debit card from a bank or a credit card from a bank and you travel, the FX conversion rate. So for banks, it's not customer-centric first. But for digital banks, it's customer-centric first. So this is the thinking the traditional banks have to change, that customer first, banking later.
Okay, that makes sense.
Yeah.
But let's move on then to perhaps a disruptor that's coming in. Not such a big discussion for this year, but last year everybody was talking about crypto, blockchain, web, meta, and all of that. So maybe I'll go and ask someone that's in that space, Rabia, what do you think? Is that going to come and disrupt and kill all these traditional banks, banking on an app, mobile super apps and all of that?
Yeah, I don't think it's going to kill them entirely. I think it will disrupt the market for sure. I think what will likely happen is the new technology will come in, new players will bring that technology to the market, and the old players will adopt and implement the same technology to offer the same service, but from an older institution. So that's most likely what's going to happen. And I think it will be really beneficial for customers because the new technology will allow banks to engage with customers in a much more interactive and immersive way. And it will also allow the banks, from the perspective of the banks, to reach a great deal many more customers, not just domestically, but also internationally, and to do so at minimal cost. So that's what's really exciting about it. I think the things to watch out for, though, are, along with the benefits of Web3 and Metaverse, particularly for the banking industry, One of the biggest risks here will be around identity theft, particularly around avatars in the metaverse. And then you've also got risks around data and cybersecurity. So whilst this is absolutely the next evolution of digital banking, and it will transform it both for new players bringing it in and existing players who will adopt the technology, it is really important to analyze the risks and move forwards with the new technology and adopt it in a way that does not put customers in danger in any way.
Isn't that a lot of it is also standardization, right? I mean, you know, when you start to look at some of the blockchain languages or even different coins and things, there's really no standard of being able to communicate with each other, maybe first of all, but regulation plays a huge part of that. So how do you think that's going to be solved? I mean, isn't that meant to be solved first before the technology? I mean, I heard the technology is the easy bit. It's all the other hard bits that
well,
that
as
needs to
a
be solved.
regulatory lawyer, I'd agree with you that the regulatory element is perhaps the most complex part of it. One of the reasons why it's so complex is because the nature of Web3, metaverse, and the new technologies that are coming out are borderless, they're global. And absolutely, as you said, in terms of terminology, so the taxonomy is not harmonized. Every country not only has its own language, but also has its own way of describing the key concepts which underlie the technology and operation around metaverse and Web3. So to try and harmonize those is a massive task, but it would be useful if the terminology could be harmonized and regulatory frameworks could be pulled together as far as possible before the technology emerges. Will that happen? Probably not.
But yesterday was really interesting. I was listening to Axel Winter's presentation, and he had a presentation on hybrid bank, where he felt it is possible over time to have a traditional bank operate alongside a kind of a blockchain bank and creates a hybrid of products. But one of the things he also said, which I thought was really interesting, was that the neobanks, like ourselves, will be in the front end, and the traditional banks will be in the back end. And maybe that's how, you know, we should maybe think about, you know, potentially the trend of this digital bank and how we would work together. Let me then move on to Roy, who's a little bit different. He doesn't really come from a banking background, comes from a gaming background a little at the beginning, esports and all of that. Tell me then, I mean, you know, how do you think about this thing called the digital bank? And is there a way that your industry is able to tap into a big population of unbanked? I mean, this is like the big thing at the moment. How do we tap into this group of people?
Yeah, I think to probably put things into perspective and into context as well, that yes, I do come from a gaming and content creation background as well, but I was previously from MES as well, from the regulatory background, and we have actually also worked with multiple Web3 clients as well, especially exchanges like the likes of Binance, Huobi, way back in the days. So actually, I'm quite familiar with regards to the entire financial inclusion, like you mentioned earlier as well, regarding the Web3 space. However, I believe there's a fine balance between innovations as well as regulatory, like you mentioned earlier as well, Lin. So yes, it's a huge untapped market for content creators as well in the banking space, especially in Southeast Asia, where majority of the gamers in the younger age are actually very unbanked. With the lack of proper, like you mentioned, before new banking, it was that sort of, like what you mentioned, June, the bank charter. And most of them, the earlier days was physical banking outlets. And due to the land size, of course, in most of the Southeast Asia region, and most of them staying in the rural area, they do not have that easy access to the banking system there as well, which is one of the reasons why most of them turn into crypto. And with new banking and digital banking coming right now into the landscape, that most of them do not have to turn to crypto right now because of regulation is much more secure as compared to the crypto regulations. Not that, you know, crypto is not secure or whatsoever, but in terms of regulations, because it's not decentralized, it's still centralized at the moment, there's something for them to fall back into, that remove of hacks and stuff like this. Someone is going to be held accountable, especially in the Web2 space. However, in my own perspective, like I mentioned, back to the balancing act between innovation and regulations, innovations can be definitely at the forefront of things. It makes things much easier to onboard the users due to, you know, the new banks making things easier, UI, UX wise, and of course, I would say much more easier, like you mentioned, for the cards applications perspective as compared to going to the physical banks to open your own accounts. However, at the end of the day, due to that, KYC AML has been something that is of everyone's, I would say, back of the head concerns as well, especially when it comes to startups. My own personal opinion. And with that being said, education is important when it comes to the Southeast Asia end of users, especially when it comes to a younger audience in the content creator space. And I believe that as startups who is targeting the space like ourselves, we have to balance the traction and growth with business ethics and, of course, compliance perspective as well, in my own personal opinion. However, I feel there is a huge untapped market for sure, right, for the content creator space. And we have seen banks coming into the gaming competition as well, especially for even regular banks like DBS, who has been very aggressive into their digital bank initiative. They have been going into this. They have been trying to sponsor gamings, like recently with One Esports partnerships. So definitely this is one key area they are looking at. Standard Chartered has been doing their own, digital bank version, factoring solutions for content creators as well. So I believe this is one of a huge market for them.
So content creates a big market potentially that's untapped. So the whole gig economy, basically.
Yeah, I would say the whole gig economy perspective, but pertaining to content creators, because as we can see, content creators are earning loads of money, right? Especially for those has been coming in during the COVID pandemic, I would say.
Yeah, so no, you're right. I think there's a lot of potential solutions for people who are salaried because it's easy. That's very traditional. People that are not, that are freelancers, as you say, they do have quite a lot of income, but a lot of that income is, in a way, for the old banks, unproven. So perhaps for the neobanks, they find a different way of being able to assess that income level.
Yes, definitely. I think perhaps if I may add on as well, regarding, I would say for the new banks, it's actually quite similar if we take into context purposes with the telcos, right? With the MVNO, I feel it's a really kind of a business model as well. New banks, like you mentioned earlier as well, Tushika, where new banks as the front end, where like most of them will act as the back end, right, for the banks as well in the future that it might happen. But I feel that this is a business model perspective of things, right? For example, that's why I was mentioning about the telcos. Most of the telcos are acting as the back end, where MVNO right now, mobile virtual network operators are acting as the front end. We take into context, I'm from Singapore, right? So from a context purposes, Singapore-wise, there's like your Circle Life, Mobile Zero, Mobile One, whatsoever. They are the front end. They kind of act like a new bank perspective in the telco format. Whereas Singtel, the guys who owns the satellites and stuff, they act as the back end.
So I want to now move on. Unbanked, a lot of people talk about farmers. I mean, that's, especially if we come from an agriculture background, like in Thailand, for example, everybody always says, oh, how can we solve the issue of farmers having access to credit? So I want to maybe turn across to Ahmed because he started a startup in Pakistan that basically focuses on this group that is hugely, in a way, untapped, very difficult for access of finance, and you've somehow managed to do it. So do you want to just tell us a little bit about, this particular aspect of your business on unbanked and untapped, and how you've actually approached it in order to make it, I hope, a profitable customer base, but you tell us.
Yeah, so you see, a lot of times we see that customers are acquired by incentivizing them. That takes your cost of acquisition too high, especially in the current world where recession is hitting a lot of countries. So you have to find a problem and then solve it. That's exactly what we did in the case of farmers. Farmers in Pakistan, they do not get timely payments in Pakistan. For various reasons, usually the agricultural buyers have a working capital issue because the crop is seasonal and their selling takes place within 365 days in the entire year. So that's what we did. And we've partnered with a lot of banks in Pakistan because the volumes are huge. We have a lending license ourselves as well. And we'll be going through the B2B2C model actually. Yes, it's difficult to acquire farmers, but we're going through the payers who have to pay to the farmer, and we've created all the technology for them as well. So we're going to take that route. We've already onboarded a lot of farmers during our pilot phase who've done about 70,000 transactions for about $1 million have already taken place. Third thing is, you have to, for a digital bank to be successful, you have to move into segments. Generation Z is one segment, farmers is one segment, other segment, merchants is another segment. And then you have to solve their problems in order to acquire profitable customers.
So just on farmers alone, what you were then saying was that your success and strategy is partnership with banks, also your customer acquisition strategy.
The customer acquisition strategy revolves around a B2B2C model.
B2B2C.
Where we go to the agricultural buyers, the large mills, we take on the payments and then we disperse on their behalf. The banks lend the money, our platform is used, and the mill gets an advantage as well because the farmer stays very sticky with those mills who pay on time. So that's how we're acquiring customers. We're going to the corporate industries, and to make it profitable, we're charging some fee to the mill, but not to the farmer, so that they are enough incentivized to come to our wallet and take the payment.
Yeah. So I think that's also really interesting. I mean, I'm an ex-banker, right? I used to be Standard Chartered in Thailand and running the region from here. Bankers always think about risk, and even neobanks have to think about risk. I think June was talking about lending being one of the biggest challenges, and I think it's because a lot of people don't understand the risk aspect. And I think what FMED has done and what Roy is also trying to say is that, structures can perhaps mitigate risk, and that's what you've done. I think you've worked with the mills to pay directly to you, and you're able then to fund the farmers. So this is your B2B to C model. And that's what I've done also in my fintech, which is sort of the unbanked underserved, is to work with employers and to make sure that with the employers, the salaries that come in is then banked on my side. So I think there are quite a lot of things that can be done. And I think in Roy's case, with your content creator, maybe it's a neobank working with you because you see the flows and maybe financing of those flows. But all of this, maybe let me turn back to June and ask, all of this is wonderful opportunity. Let's get down to the bricks and mortar. You've built now, Grab, which is fantastic, and Utrip, which is also, I think, doing exceedingly well. What do you see the challenges? I mean, we are talking about digital banks, but I think it applies to anything. A challenge of building a successful startup. What do you see the challenges as being?
All right, so we all know that there are tremendous opportunities out there, of course, but in the past few years, there was financial market turmoils, and of course, everyone is trying to digitize. Digital bankings were everywhere, but I guess when we talk about challenges, that we have to be kind of frank to ourselves, right? Who are we to kid? Now, I guess the common themes that I've been hearing so far, and there's other speakers addressed some as well, I guess that would be the regulations, acquisitions, marketing, right? And also monetizations. Just to dig down a little bit to give you some examples, right? In terms of the regulations. So far, I have not seen any companies in this particular industry who could conquer the world or be successful in multiple regions, right? What you can do in one country, whether you're successful in one country or not, it doesn't mean that you can be successful in another country. And that's because this industry is well protected, right? So in terms of regulations, if you're B2B, it might be different, right? Then you'll be working with partners, you'll be working with businesses and corporates, whereby they understand the local markets pretty well and they know the regulations. But if you're global companies, that's totally different. And let's say, take certain countries, the regulations might say, you are required to have data centers, even though you're cloud-based, and the country might not have the data centers to start with, right? So, and as mentioned earlier, if you are a neobank or a fintech, then your landing model becomes very important for your survival. And if the regulators go against you and say, let's say, if you are in crypto business and you're not allowed to do any marketing, you can pretty much go home. So, right? So if you really want to digitize yourself and let's say provide very good user experience, of course everything has to be digital. But if the regulations require certain KYC, in a way that kind of if the infrastructure is not there, take Thailand for example, there is NDID, Thai national identification, but it's very costly. So for normal startups to go about it, or the fintechs to go about it, it's hard, right? So now let's come down to acquisitions, then marketing, right? So I guess let's take the challenger banks. When they compete for deposits, there's really no front end or feature innovations that can actually help you go around it other than offering better interest rates. Now, so for the past few years, what we've seen, you can promise higher saving rates, but then, when the supply chain got affected, when there was like turmoil in the financial market, there was a bond bear market, which was not precedented in the past 40 years, then how you manage your risk when you lend out money on the other side, and then yet you have to pay the interest to your depositors, that became quite challenging for many digital banks that we've seen. So you either close shops, or a few months after launching, then you send out emails say that you will change the interest rates. And then because there's no friction for people to move money out, it's a very competitive environment. Yeah, then there you go. Your acquisition strategies can also backfire. Now, when you are a fintech, I guess one way for you to compete with the big guys, close competitors, is you need funding. Now, before COVID, the funding market was pretty active, right? And then you could be bold, you could go out there, you could acquire customers in a way that, when you're more agile, then you could take more risk. And I think as 2021, that was the peak for fundraising, right, or for fintechs in particular. And then you entered funding winter, right? Let's say Q2 this year, fintechs still, in Southeast Asia, fintechs still topped, as in like the vertical that got the most investment, but it's still significantly lower than the year before, and then the peak in 2021. So that became a challenge when you need to compete with the big guys. And investors changed the way they look at startups in general, right? When you look at the tech cycles, when you don't look at like Apple's or Microsoft of the world, that's a different story. And then, everything is connected when you look at the capital markets. So when, they say that, eyeballs is not the new currency anymore, you have to look at your hardcore ability to make profits, then where do you get your money to really acquire customers, even though your cost acquisitions can be lower in banks? Yeah. Now, let's say for monetizations, this industry, because it's so competitive, you need a huge scale in order to make money. If the infrastructure cost is high, if the marketing cost is really high, then how do you go about it? And if your business models are pretty much the same, then you can't help it but enter price war. Right? Then who's the last guy standing? So I guess that in general, these are the challenges that I see are pretty common across the world.
So regulation, customer acquisition, funding, monetization. Does anyone have a quick answer for any of these challenges from the experience that you've built? Or do you kind of all agree? I mean, we all know they're challenges, so now let's look at answers for challenges. Piksha, any insights on how you would address these challenges?
Yeah, I think some of the challenges which startups or fintech starts, maybe one of the opportunity could be partner with another fintechs, because all other fintechs are API based, and there could be a potential opportunity that doing everything in-house, you look for another partners who can help you to reduce the cost, or they can share the experience with other partners. They might have launched the same solution with another company, and they can share that what they have done, and you can learn from those and can provide a better solution. Like focusing on a strategy, think big and start small. Start small and keep on enhancing your product, keep on doing the phases approach, keep on partnering with other providers in the market.
I'd agree with that. And in addition to partnering up with other fintechs, a strategy that we see employed quite a lot in London actually is when you've got these new businesses, which exactly as June described, are struggling with so many costs on so many different levels. A really good idea at first is to outsource some of the functions to professional providers. So for example, you could outsource some of your compliance roles to a compliance consultancy until you've got the resources to build up your own compliance team in-house. A lot of firms will go for an outsourced general counsel or lawyer to advise them before they have the significant funds that it takes to hire your own internal lawyer. It's very expensive, way more expensive than compliance. So those are some of the strategies. The only other thing I'd mention is it is worth getting advice early on how to spend your money more effectively. So a little bit of spend on consulting advice around strategy and even reg tech tools, so you're not doing all your regulatory compliance work manually. That automation piece can help you save costs as well. So at the beginning, I know it's strenuous, but spending a little bit on those sorts of strategy, reg tech, and legal services at the outset will save you a lot of money over the long term.
Yeah, I wanted to add on a little bit on that as well. Sorry about that. So I feel wanted to answer on two of the challenges. First being costings, right? Managing of the cost, and second being funding. I'll start on with costing first, and it goes with the Pareto law strategy, right? 2080, right? I think most of the big startup is kind of worried on the optics side of things instead of the cost effectiveness, because most of the startup, especially in Southeast Asia, I feel it's an Asian mindset that, hey, you know, how big is your company? Oh, we have 100 employees. Wow, you're doing great, fantastic, right? You're rewarded by how big your company is instead of the effectiveness on the company. And I think this is one key area that most startup founders have to really understand on that as well. And not just startups, right? We have seen in recent years, especially lately, I would say that most of the tech companies have laid off, or even Elon Musk, they have laid off 80% of his team member, and it's still functioning pretty good, right? In fact, they have all-time high of users and stuff. And I believe that is one of the key things that most startups, or I would say other companies, have to take note of. And with secondly, regarding funding, recently we just got funded, I would say, for Emerge side of things, and we got funded at the worst possible time, to be honest, right? It was the FTX saga, it was the Luna crash, it was like the quantitative tightening. So we still managed to get funded, and one of the key things I believe, right, is regarding the success of the company is the most important thing is about answering what your customers' needs are. I say that's the most important thing. You can build a very fluffy product, your product can be great, and I feel most founders, they are too focused on making a perfect product and not making a product that your customer needs. You have to rush out an MVP as soon as possible and let your customer try it. I feel that's the most important factors of things, right? Come out with a pilot that's barely functioning, get your customers' inputs. At least that's what we did, right? We get the customers' inputs through a pilot. Yes, our UI UX looks extremely bad, to be honest, right? It's pretty laggy at times, but at the end of the day, I feel you can be honest with your customers, get honest opinion and feedbacks, and tell them, hey, you know what? This is my first reiterations. This is my first iteration of my products. Yeah, it doesn't look great. It's kind of laggy at times, but this is the core functions that we are building, and I want to seek your feedbacks on things. And I think this one key area about customer success is to really have that sort of user stickiness. And I think this is one key area that Utrip did very well. The reason why is because my entire company has a Utrip card, and most of them here, which my team members has a Utrip card, including myself. And that's one of the key things is they solve the key problems of, first, making things easy, right? Second, I would say, is really having that sort of the best rates out there as compared to going to a money changer, to be honest.
Fantastic. Ahmed, do you want to add one more?
So on the funding part, you see, pre-COVID, all the startups used to focus on hyper growth. Post-COVID, the scenario has actually changed. You have to look for more ways to increase your average revenue per user. So, you know, if that's falling in place, I don't think funding will be an issue because you know, everyone wants to invest in a profitable company. But the high growth model has to be changed now. I believe it will move to be high ARPU based model in future if you want to attract big funds.
Yeah, difference. I want to give the last 5 minutes, perhaps to the floor, to see whether there's any burning or dying questions that you would like to ask the panelists here. The last session was quite lively from the floor, but no questions. Okay. Does anyone want to add any more? Ahmed, I know, I'm sorry, I cut you off a little bit. But maybe another question then. Let's talk a little bit about AI, right? Because, you know, we talk about blockchain and meta and all of that, but now AI is like the new buzzword. Is that something that you think digital banks should be focused on? And if so, how would they, you know, how would they work?
I'd like to tap on the AI portion of things because most of the, like you mentioned, buzzword, right? Buzzword, most search word of last year was NFTs. I believe the most search word this year will probably be AI with the ChatGPT coming up pretty hot earlier this year. With regards to buzzword, right, or AI, I would say that even I wouldn't say just banks, but mainly most startups trying to do that. You need to have a large enough sample size in order for you to have AI, because it requires a lot regarding machine learning. And with machine learning, you need to have more inputs for them to have, in order for you to generate accurate, correct, I would say, answers for them to refer to. Because if you only have like probably 10 users, right, during your pilot phase, probably AI is not that accurate for you as a startup.
I think with AI, the biggest proponents of AI will be the tech giants that are now entering the bank world. And I think that's going to be one of the most significant impacts on the banking world in terms of the future of digital banking, I think in the next 10 to 20 years at least. And it will be a really interesting transition because traditional banks have reigned almost exclusively over this domain for centuries. And then in the last 10, 20 years, they've had some disruption from the fintechs and the digital disruptors. But the fintechs mostly were startups and did not have the reach and the resources to compete with the traditional banks quite in the way that the likes of Apple and Google, as they enter the banking world, will compete. And I think it will be a formidable match between the traditional banks and the big tech giants, which in the short term could benefit customers because it will likely mean more attractive offerings, lower prices. For example, I think the big banks were paying 0.5% interest on current accounts or savings accounts last year, whereas Apple recently offered 4.15%. So it's really interesting how, in terms of the future of banking, how the big tech entrants coming in will change the game. And I think the last and very important point I'd make about it is that as long as the big tech giants are coming in and competing in a fair way, and it can only be good for customers. The trouble will begin if they come in and sort of take over, and that's where, once again, the solution is regulation. So I think in general, new entrants are good, but if we don't have regulation to ensure fair competition, then we'll be in trouble. I can see a hand, I think Roberto, yes. Go ahead.
The mic is coming.
Someone's running.
Yeah.
Okay.
Thank you. I think the comparison to telcos is quite interesting, right? A couple of years ago, it was, telcos were big, it was a very hot industry, etc. Nowadays, they've become like utility, and whether you was telco A, B, or C is almost become irrelevant. It's not something you talk about. Do you think the same will happen to traditional banks in the next years?
Can you repeat that? We couldn't quite hear you up here.
I think the comparison to telcos is a quite interesting one. A few years ago, telcos were, it was a hot industry and it made a big difference which telco you're with. Today, they've become like utility companies around the world. Do you think the same will happen for traditional banks?
Yeah, I think the difference there is the lobbying power. So I think the traditional banks have phenomenal lobbying power. And if you compare with what's been going on in the last 10, 20 years, where they've been competing with the fintechs, which have done phenomenally well, but they don't have as much lobbying power as the banks. So regulation still sometimes favors the banks, for better or for worse. But where there will be a real competition is when the big tech giants, who I would say either have more lobbying power or the same lobbying power as the traditional banks. It's a real fight of equals now. And at the same time as that fight will be going on, the fintechs will keep doing the amazing stuff they're doing and growing and presenting a challenge from a different angle. So it really is a very exciting 10 years ahead between the big tech entrants, the fintechs really gaining more power, and the traditional banks, which are used to ruling, but now have some real competition in the ring.
These traditional banks, if I may add, the traditional banks will become plain boxes who will be storing only money or value money. All the front-end relationships will be handled by fintechs. The customers will be handled by the fintechs. Consider it like a dump pipe which is holding money, and that's what will happen to the traditional banks.
I want to add one more to the tech. I think whoever has data, transactional data, is going to really be the king in the future. So there are many things like the telcos, they have it, but they don't know how to use it. Retailers have it, they don't know how to use it. And I think if you're closer to the customer, you're getting that data from the customer, and even banks are not able to do that because a lot of their credit cards are through Visa and MasterCard, so they're not getting the last mile data, and that's part of the problem. We're running out of time. I just want to quickly, sorry, did you want to
I would
say
like to
something?
add on to what you mentioned earlier, Lynn, regarding the data transaction, and I totally agree with that. The reason why is because recently Singapore has been giving out digital bank license as well, and Grab and Singtel has been one of the forefronts. And this is very important for them as well, because they have that sort of data from it as well. Both Grab and Singtel is one of the largest, if not the largest telco in Singapore, and Grab speaks for itself, right? Everyone here knows that as well. And with the two giants linking up, with Singtel also having other sort of telcos in throughout Southeast Asia, or even in Asia as a whole, I would say that with that sort of data, especially transaction data and consumer purchase habits, is something that is going to be a force to reckon with, I would say.
Perfect. So let us end here because time is up. Just closing, 3 words, no more than 3 words, if not you all owe me a big drink. What is the advice that you would give somebody who is trying to enter this space, like a supplier of service or becoming a digital bank? What is your advice in 3 words for these people? So who wants to start? You start.
I can start. I think customer-centric.
3 words?
Okay. Customer-centric, innovative, and embrace the technology.
Gee, those are more than 3 words. You owe me a big drink.
I'll do 3. Get professional advice.
Okay.
Keep having fun.
Keep having fun. Okay.
Solve a problem.
Solve. Okay.
Due diligence and research.
Due diligence.
Research.
Research. Perfect. And for me, it's customer focus, agility. Thank you very much, everyone. You've been a great audience. Thank you.
Thank you, everyone.
Thank you, everyone.